Hi, I'm Lan, your trustworthy accountant. Many people think that if they live overseas and are not Australian tax residents, they do not need to deal with Australian tax. But this is a common misunderstanding. If you own an investment property in Australia and it is rented out, you are likely to have ongoing tax reporting obligations. We have recently helped many clients who bought a property 7 or 8 years ago, but never filed any tax returns because they had been living overseas the whole time. They assumed they did not need to report anything. Only recently, as ATO and related authorities have become stricter, they realized that if their Australian property is generating rental income, their reporting obligations remain. If you fail to lodge for many years, it is not just a matter of catching up. It may also involve late lodgement penalties and interest. In general, the longer you wait, the higher the cost. So what are the main steps for overseas landlords? First, apply for a tax file number, also called TFN. Without a TFN, later tax filing may not proceed smoothly. Offshore applications usually take around 4 to 8 weeks. Second, lodge rental income tax return every year. As long as the property is rented out, rental income generally needs to be reported annually, whether you are in Australia or not. Third, pay attention to land-related reporting. Some owners may be affected by land tax. In some cases, overseas owners may also need to lodge vacancy-related declarations. Even if no tax is ultimately payable, the required forms still need to be submitted on time. Fourth, pay attention to foreign owner surcharge. When buying property, some overseas buyers may be subject to foreign buyer's duty. During the holding period, some owners may also face land tax surcharges, depending on their status and ownership structure. Fifth, if the property is sold in the future, capital gain tax may also apply. In addition, for contracts signed on or after 1st of January 2025, the buyer is generally required to withhold 15% of the sale price and pay it to the ATO. This may not be the final tax payable, so early tax planning is very important. Therefore, for overseas landlords, tax obligations in Australia do not end after buying the properties. From ownership to rental income and future sale, ongoing reporting and compliance were often involved. If you live overseas and own investment property in Australia, but are unsure whether you have filed correctly or if you have never lodged before, it is best to review your position as early as possible. We are experts in QBCC compliance and advanced tax planning. We help you move forward with clarity and confidence. Remember to click like, save, and follow.